Alright, what is going on, everybody? Hope you guys are having the best of your entire life. Now, I am finally home after one week or 9 days of a beautiful vacation. So anyway, if you do not know me, my name is Sumesh and I'm going to go over a few stocks that I think that can make big moves upcoming week. Of course, these are my opinions only, so this is what I think based on the charts, based on the technical analysis. And I'll also break down NVIDIA stock as well because it's coming out with a split. So what does that mean for the stocks and what does it mean for the share price and what does it mean in general? That'll be towards the end. So anyway, let's go over the three names that I'll be watching. Those three names are SPY, QQQs, and Meta. Now, I did go over every single name like that you can see on my screen right now. All these names on the right. SPY, QQQs, SPX, Apple, AMD, Amazon, Meta, Microsoft, NVIDIA, and Tesla. These are the stocks that I trade every single day. Like, this is it. I try to keep my stock list very, very small. So the only reason is I know how these levels, how these names move, how these names react to certain levels on their charts, what sort of moves they like to make after a level break, right? So it's very important to kind of understand what stocks to trade every single day, or how these stocks actually move. You know, how people can trade new names every single day. I just can never do that. I've never been able to do that. So I personally think you should only be trading the names which you know how to trade, and that's the best way to go about growing your small account or just in general trade as well. So my name is Sumesh. Been day trading 6 years, and you're watching the Sunday Watchlist episodes, the show that I've been running here on Instagram and also on YouTube from over a year now. All right, so let's go over this. And first name is SPY. I'll break down the weekly chart first. Okay, let's stop all the drawings. What happened on a weekly chart? As you can see on a weekly chart from probably last 6 months, we are in a strong uptrend. Every dip has been getting bought back up. But on a weekly chart, when you see right now, it was kind of like, when you see this, kind of forming a flag, and then it went up. But also, pay attention to this very close thing right here, all right? The super interesting thing that I see on the charts right now is this. We made a highs, like this is all highs, right? Like last time when we broke the previous highs right here, the volume was insane, right? And it made a high. Sweet. And then these red candles got big volume. Okay. And then the new highs were made right here. Check the volume. Why did the volume drop so much? We are making new highs. Like last time when we made new highs, we made a huge spike in volume. Why the volume so low? And that usually tells me that there might be some FOMO phase going on. And basically the stocks love to move in a framework. All right. So the framework that the stocks love to move in is this very simple framework. And this framework kind of go like this. So stocks will stay in a chop. Okay. After a chop is broken with a lot of volume, stocks move up. So this phase, the chop phase, is called accumulation phase. Like stocks accumulate here. Who accumulate here? All the big names, like, you know, the hedge funds or the smart money that we call them. They're accumulating their shares, and then the stocks start pushing on some good news or whatever, right? And the volumes pick up. Sweet, that's what we want. And then we have a pullback. Why do pullbacks happen in general? Pullbacks happen because all these people who were accumulating here, now they need to take some profits, right? Imagine you have 100,000 shares of a stock, right? And it went from $100 to $115. That's $15 a share. That is 100,000 times 15. That's $1.5 million in profit. Now, would you take it? Yes, right? So what happens is now they might be taking some profits, and the profits lead to a pullback. Now the pullback happens, and you can clearly see there's a lot of volume. That means a lot of people were selling there. But who was selling? All these people who accumulated shares here. All right, sweet, all done. Then stocks make a new high. And this is where all the smart traders trap the retail traders, making them believe this is about to keep on going higher because they missed this first leg. Because all these, retail traders are thinking here, oh my God, man, I wish I got in here. I'll wait for a pullback. Now they give you a pullback. Okay, there's a pullback. Now I want to catch this move. Let's see if it can break the new previous highs and it can start making all-time highs again. They give you that, but that happens on a low volume. Why does that happen on a low volume, low buying volume? The only reason why that happened on a low volume is because the big money is not getting in now. The big money was here, like in this phase. They're still holding some shares. Now what happens is there's no volume, you can see, and then it pulls back a little bit, and then what happens? No volume. This phase is called FOMO phase, towards the last FOMO. And the red candles, if the red candles start getting more, like look at this, red candles have a little bit more volume than this green candle. We are making all-time highs here, but the volume dropped. That means new buyers are not interested. Now what can happen here is, if we had a decent pullback, let's say if we even broke below this $500 mark, right? If we, now I know that's $34 away. I'm trying to just break down, this is just an example, right? If it breaks below this, stocks can move lower rather quickly. And this phase is called distribution. Now distribution starts. Now who distributes the shares? The people who accumulated here. They kept selling. Now they will really dump. And the stocks dump. Then it starts accumulating higher than this previous high. Same thing again. And hence trend phase, you know what's it called? Higher highs and higher lows is formed. Now, if this is sounding to you like, oh my god, bro, I'm so confused, you need to really educate yourself about trading. Like, you have no idea. If this makes sense to you, like, that's good. That's really good. All right. Otherwise, you're trying to compete against people who know these structures. All right. I'm not saying that this is gonna happen. I'm just trying to break down what's happening in front of the charts. Nobody knows what's going to happen. You can only kind of predict, or you can only kind of assess what's happening. And that's what I assess right now. Okay. Now let's go over the levels that I'll be paying attention to. As I said, I don't know which side they're going to go. So which is why I'm going to watch both the sides. But towards the downside, if we break below 532.5, we can head down to 531.5, which was a strong critical level last time. And then if that breaks, we can head down to even further 530-ish level, which was held down last time very nicely. If that breaks, we can come down to 528. 528 breaks, every $1, every $2 moves. All right. What about towards the upside? Towards the upside, I'll pay attention to 537. That's an all-time high. Stocks can keep pushing on a low volume. The all-time highs as well. That's cool. 537, 538, 539, 540. This is what I'm watching. As long as it's pushing up, doesn't matter, low volume, whatever. If it goes up, if it gives us a trade, we will take a trade. Make sense? So I'll be watching this on SPY, but this is why I just wanted to break it down so you kind of understand the structures on the bigger time frames. Now QQQs, kind of a similar chart like SPY, or almost exactly the same. Now QQQs will be interesting below 460. 460 was a critical level, as you can see right here. It was a critical level. If 460 breaks, we can head down to 459.3. That breaks 458, which is a critical level, and then down to 455.6, which was a insane critical level right here. Towards the upside, 466, 67, 68, 69. I don't know it because it's an all-time high. I have no idea where you're going to stop. But all you can do is just try to make sense of the stock. If that makes sense to you, you take a trade. If that doesn't make sense to you, you don't have to take a trade. This makes sense to me because, as I said, I only trade these names and I know how they move. QQQs love to move every $1 move. Amazon loves to move every 50-cent move. AMD loves to move every 70 to 90 cents. Apple doesn't fucking love to move too much, but if it does, it moves in about 40 to 70 cents range, right? So that means if a critical level breaks, it either makes a 40-cent move or 40 to 70 cent move before it makes a first pullback. It's just after a while you kind of have a feel of the market, right? Now, this is what I'm watching on QQQs. And the last name that I'll be paying attention to is Meta, and after that I'll break down the Nvidia, the stock split, what's happening as well. Okay, now Meta, it looks interesting. Why? Meta was forming a big trend line on the top. previously. Okay, so it was forming this insanely nice trend line on the top. And the trend, there's a rule about trend lines. Trend lines work only if there's about 3 touches minimum. So there were 3 touches here. Then the 4th touch happened here. It got a rejection. 5th touch happened here. Had a rejection that day. Then it finally broke out with a little bit more volume than the green candle, red candles previously. Then it pulled back, retested. As you can see, buyers really picked up a lot of volume, and it made a move from 460 to all the way to 503. Now, this is why I will be paying attention to this, because it's bouncing off a trend line, which was very nice. And that trend line lasted for like 2 months, which is insane. A lot of touches. Now, I'll be paying attention to this over 500. 500 is a huge whole number. Okay, every 50 cent, write this down if you can. Every $50, every $50 move is called dynamite stock, dynamite level. So 50, 100, 150, 200, 250, 300, and in this case 500, 550. These levels are called dynamite levels. So when you're shorting, let's say you're shorting a play. What is it? What is this shorting? Shorting is essentially where you sell the shares first, and then you buy those shares later, and you're betting that the price goes down. You go long on a share. When you buy the stocks, you're betting that the stock goes up. You buy first and then you sell later. Shorting is just exactly opposite. You sell first and you buy back later. Now, if you were shorting this, where would your stop loss be right now? Just above 500. So if your stop loss is right above 500, and to close the position, you need to buy those shares back, what happens? As soon as 500 will break, there will be a lot of stop losses getting triggered. And when the stop loss is getting triggered, all those orders are coming into the market as a buy order. But it's not actually people buying it. It's just coming into the market as a buy order to close the position. So that's called synthetic buying. Okay, synthetic buying is when there's actually no buying, but it's just your order close that's happening. And stocks move up big time when there's synthetic buying happening. Okay, so watch this above 500, move to 503, 506, 510 is what I'm watching. But just in case it's decided to make a little pullback, which can happen at the same time as well, because it already kind of made, as stocks move like this, like it already kind of made a move. It might pull back down to this 480 level, and it will still be making higher highs. Still will be an uptrend, and then it moves. Alright, so if it breaks below 490, we can head down to 485, which seems like the last time when we did that. Last time we broke here, it went down at this point. Last time when we broke here, it went down this point even further. So 490 down to 485 and 480 will be a critical level, and I will be watching that. Sweet. These are the plays towards either side. Now let me break down what's happening on NVIDIA. So NVIDIA is having a split, 10-1. So what does that mean? What does that even mean? For example, I'll give you an example. All right, we had our place. We had pizzas, right, tonight for dinner, right? Because we were just coming back from holiday. There was no food in the fridge, and we were just didn't want to fucking do nothing, to be honest. Anyway, so let's say this is a pizza. All right, me and my missus, we ordered for ourselves. All right. And we were like, all right, we'll eat half each. So we ordered like a medium-sized pizza. We'll eat half each. Okay. This is mine. This is my wife's. Sweet. But then my brother joined. My brother's like, oh, pizza? I'll have a little bit as well. Sweet. No problem. Now we're like, okay, let's split it into 3. Okay. So instead of us having half each, now we're having 1/3 each. All right. 1/3 each. So this is wife's, this is mine, and this is my brother's. Sweet. And then what happened is one of my mates rocked up. He's like, oh, bro, what's going on? Oh, you guys having a pizza? So now we divided the pizza into 4. Now what happened? We have in 1/4. I know, but it is what it is. Now we have in 1/4. This is wife's, this is mine, this is my brother's, and this is my mate. Let's call it a friend. So what basically happened, it's the same pizza, but just got divided into more pieces. That's it. So this company will be the same company. It doesn't make it cheap like the stock. It just the stock price gets cheaper. The company doesn't become cheaper. It's just the same pizza, but you just divide it into, now you had one pizza, one slice, or one pizza. Now they're doing 10-1. But every single pizza got divided into 10 different portions. That's what's happening. And that's it. This is all. So 10 to 1 doesn't mean nothing. It's just the same pizza got divided into multiple more things. Now, what changes here? The only thing that will change here is more people will be able to afford more shares. That's it. Yes. And if you already own, like, let's say 100, like I own 1,000 shares of Nvidia that I bought at 140-ish something, right? I'm up like 10 times, 10x on it. Now, what happens is now I own just more slices. It's still the same amount of money. I just own 10 times the shares, right? So basically, if I own 1,000, now I own 10,000 shares of Nvidia. That's all it is. All right, so the money stays the same, nothing changes, and that's all. It's like kind of getting, sometimes what used to happen was when I was a kid, my dad will give us 5 rupees. 5 rupees, it's nothing, but just think of 5 rupees. I used to love having 5 rupees as a bill, just one bill, 5 rupees. I'll put in my savings. My brother used to love having $1 bills times 5. It just felt more. Oh my God. It just feels more. That's it. But it still has the same value. Think of it. Best way. And that's called stock splits. Nothing changes. It's just fancy way of pretty much nothing. Alright. And that's it. I hope you enjoyed this video. I hope you learned something from it. And if you did, let me know in the comments down below as well. I appreciate you. Thank you for stopping by. Make sure you subscribe to the channel. And if you haven't commented, like, do whatever. Do your thing, man, please. I'm not a YouTuber. I don't know how this thing works. Subscribe. Why not? All right. See you later. Peace.